Hi, everyone. It's Christine Kopr here with your March 2024 Vancouver real estate update. Well, the numbers are in, and as we suspected, sales are up, and so are prices. For the first time since last year, definitely the beginning of spring market is here, and there is a shift in confidence, which has got buyers taking action in today's market. And it makes a lot of sense. Everyone's been on the sidelines for a really long time over the last couple of years with all the interest rate increases, fear in the marketplace, and finally getting to the point where many of the banks have indicated that they think that rates are going to come down sometime this year. Now, whether they come down or not is a whole other equation. Fact is people can afford their current mortgages at today's prices, and we haven't seen a massive fallout, which was one of the major concerns of the resetting of some of those mortgages that were taken when interest rates were significantly lower. We're 1 year in, there is still a renewal wall, so to speak, coming up over the next couple of years, but so far it seems that the banks are faring, and in fact, all those stocks are up and looking good. So let's take a look at Vancouver's real estate market for the month of February and go from there. As we do every month, here we have the stats from the Greater Vancouver Realtors, formerly the Real Estate Board of Greater Vancouver. For February, we had over 2,000 sales, excellent month, and we're definitely on track to hit over 2,000 sales again here in March, so that's fantastic. Sales were up a whopping 45% month over month and 14% year over year. That's a significant difference from where we were last year, and market psychology and the activity. Obviously, last year's spring market was extremely strong, and we definitely have signs of that repetition to come. Albeit having only 2,070 sales in February is still 23% below the 10-year average. It's not quite where we want to be with average market conditions. However, the fact is we do have strong sales compared to last year, and things are looking quite positive moving into the spring. New listings came on at 4,560. That is a 20% increase month over month and a whopping 31% year over year. Finally, the listings are coming, and that is reflected in our 10-year average. We're pretty much on par with our 10-year average. The new listings coming on is falling in line with averages. Our sales are a bit weak comparatively. However, overall, our listings are still quite low. We have a total inventory at the end of February of 9,634 homes on the market. It's up 11% month over month and up 16% year over year. And we're 10% above the 10-year average of what we'd want to see, but it's still not quite enough to satiate the demand. January, February, buyers came out hot and the listings didn't quite catch up yet. And we almost fell into what felt like a seller's market. And in fact, who knows, we might even head into that direction this spring because we are currently sitting at 4.7 months of inventory. That's considered a balanced market. If you followed me before, you know between 4 and 6 months of inventory is considered a balanced market, and they don't last very long. We either drop below that 4-month mark, which would be considered a seller's market. There's just not enough inventory to satiate the demand, or we tend to go 6 months and above into a buyer's market where there's more inventory creating downward pressure on prices. And you can see that we've been slowly tightening up as this year has kicked off, and we're sitting at 4.7 months of inventory. And I wouldn't be surprised if the demand continues and there's not an overabundance of listings that we could actually hit about 4 months of inventory next month, or potentially even a seller's market for good product. Benchmark price, we are now sitting at 1.183. So we've regained some of what we lost as we were seeing month over month price decreases. And now we're seeing our first gain in a little while here. Actually, since last year, we have a 1.9% increase month over month in terms of prices. That's a big deal when you're talking $1 million price tag. And if that continues, we're going to start getting more of that appreciation into the spring. We're up 4.5% year over year. So prices, while they had taken a hit at the beginning of last year, they had a good run in the spring. They took a bit of a hit again when we had rate increases last summer. But now we're starting to get that recovery again. And quite frankly, prices are hanging in there. So for all those pundits and people talking about the market is falling out from underneath us, so far it has proven to be extremely resilient. And part of that can also be with where mortgage rates are sitting today. while they are still very high, they have come down and they've settled in around that 5 to 6%, depending on your situation, and even in some cases dropping below 5%. Taking a quick look back at the sales, you can see that there has been visually quite a demand in this uptick in spring. We're already sitting at about 1,100 sales already this month, and we're just halfway through the month. So if the activity continues, which we would suspect with more listings coming on in the spring and buyers getting more active, we could probably see 2,200 sales plus here next month. And putting it all into perspective, this is our residential average prices from January 1977 to 2004. Over the long term, while there are the peaks and valleys, there have been recoveries, and we're still on that upward trend despite the shorter term market activity or changes that we've seen over the last couple of years due to rising interest rate increases. And of course, previous to that, having way too low interest rates for far too long. So what does that look like for Metro Vancouver homes? Today, you've got detached homes. Sales are up 8% over the year. You're now sitting at a benchmark of 1.972. So almost $2 million for your benchmark home in the Metro Vancouver area. You're sitting at an increase of 7% year over year. So if you bought last year, quite frankly, you can be up 7% on your almost $2 million purchase. And look at that, a whopping 1.6% increase month over month. So things are looking very bright in the future. Townhome sales are up 10% year over year, with the benchmark just sitting under 1.1 million. Your benchmark price year over year is up 2.6% and a whopping 4.2% month over month increase. That product has a ton of demand. Condos up 18% in terms of your sales activity. So a lot of activity in the lower end of the market, which is where it always starts. And then you get your move up buyers. And we're now sitting at $770,000 for your benchmark condo in Metro Vancouver, with prices up 2.5% year over year and up 5.6% month over month. Wow, that is incredible. Good time to be in the market. A couple of other things, regulation changes that have recently been announced with the new budget, some of which still has to be approved and changes taking place into the future. But one change is the home buyer incentive program. That was that partnership between the first-time home buyer and the government. They were going to go in on an equity share of your home with you and participate in the ups and the downs. It never really got taken up, and so therefore it was canceled. But the land transfer tax exemption has been increased, and that's going to start April 1st. So it used to be under $500,000, you were exempt from paying land transfer tax, and now that threshold is going up to $835,000. Now, properties in the Metro Vancouver area, if you're a first-time home buyer, you're going to be able to save some money there. And the same thing with the pre-sale contracts. If you're buying newly built homes, that exemption is going from $750,000 up to $1.1 million. So it's going to really help offset some of that tax that you would normally see and can form part of a down payment, which is usually the largest barrier of getting people into homes in our community. The other change that was announced was the flipping tax. For those of you that recall, there's actually already a federal flipping tax. So if you are assigning a deal, a lot of this has to do with the pre-sale market. If you're buying and flipping your contract or purchasing and flipping right away to capitalize on a gain, there's a federal income tax that you pay. And instead of calling it a gain, the federal government is taxing you as business income on that gain. What we're talking about that just was announced is actually not related to that. So that still exists. You will be taxed in that way for those types of situations. But the BC government is announcing a flipping tax as well. More details are to come. It doesn't start till January 1st of 2025. And it sounds more like a levy versus a taxation part of your income taxes. We don't have all the answers yet, but basically if you buy and sell a property within the first year, you have to pay 20% on the gain. And we're unclear if that's gain as in a capital gain, you buy from here to here, or is that an income produced from that sale. So the tax consequences to be determined, but fact is you're paying 20% in the first year. And then there's a sliding scale reducing as you go from years 1 to 2. Now, of course, there are exemptions for things like divorce or relocation for work. However, the whole point is to deter speculation and people just buying and selling properties for purely speculative purposes. The information out there states that it might actually impact only 2% of sales. So really it's just a nothing tax targeting a very small portion of people, but nonetheless, it's there and you need to be cognizant of it if you're making any kind of decisions or upcoming changes in your life. And then, of course, we also had the announcement to extend the foreign buyer ban for an additional 2 years, which was supposed to end 2025, and now it's being extended to 2027. So those are most of the regulatory changes that have happened. What's driving our real estate market right now? Well, the fact is consumer confidence is strong. And this is really tied to interest rates. And I think people being tired of sitting on the sidelines and they want to finally get into the housing market. And buyers recognize that most likely than not, if interest rates start to come down, there's going to be more people entering the market. And the fact is there are people ready to enter the market and they can afford it today. And we are seeing that with the activity on the streets, in our open houses, on our listings. Lots of properties are selling in multiple offer situations. We're starting to see subject-free offers again. And so if you want to enter this market, you do need to be prepared. And if you're thinking about making an upgrade, now could be the perfect time to be putting a plan together, going from your condo to a townhouse or townhouse to detached market. And we are seeing those subject-free offers and multiple offers in the detached market as well, with property selling, in some cases, 100,000 over asking. Now, this is not in every single market circumstance, tend to be the cream puff properties, the perfect presentation, the perfect layout, the perfect location, move-in ready, no renos, anybody and everybody wants to live in that home, and of course, priced well. Interest rates. There's been a ton of talk about interest rates and market pundits suggesting, and even the bank suggesting, that the Bank of Canada is going to reduce interest rates sometime this year, maybe as early as this summer, because inflation is finally trickling down under that 3% range, which is what Bank of Canada's goal truly is. Of course, they are struggling because if we have an overheated spring with inflation, as in higher priced homes, that increases inflation, and that doesn't do the Bank of Canada any favors, and they may have to raise rates again to get that under control. So that is their major conundrum, trying to do this balancing act of not reducing rates too soon so we don't have an overabundance of activity in the real estate market, offsetting the gains that we've made in terms of reducing inflation. While it's possible that we're going to see interest rates reduce this year, the fact is that there is no guarantee that there's going to be a reduction in interest rates. So keep that in mind if you're making the decision to enter the market today. We could stay higher for longer, and I think there's a very strong probability of that, especially with the activity that we're seeing in the spring market right now, and we're only just getting started. Just think about it when the weather gets better and the grass is growing and all that, when people are ready to list their homes. And how many buyers have we come across, potential buyers that are waiting for the right home to come on the market so that they can list their home, which isn't always the best strategy. But the fact is, there are people out there who want to buy. And that actually relates back to inventory. Part of the cycle that we have is we need listings to come on the market. And if the sellers of those listings don't have other homes to buy, they hold back. So it is good that we're starting to see this activity. It's good that sellers are starting to list their properties. And the more of that is going to be able to help facilitate more of these sales and create a stronger market. I personally believe that we're going to see a further increase in sales as well as in prices. And hopefully they'll be moderate throughout the year with controlled activity so that the Bank of Canada can just hold rates and let this whole rate change thing work through the economy, because we do have those 2 more years of renewals coming up. And so if we can get through that, obviously it'd be lovely if rates could come down, but we just need to see that inflation staying low. This is the 5-year bond rate, which is what impacts your fixed rate mortgages. You can see we're sitting at 3.7. It's been bouncing around, still sitting at 3.6. So the market's kind of doing its thing. So if you're thinking about a 3-year term, just until we get through this interest rate situation to really see what happens in the economy, it could be a really good option, and rates are kind of hanging around here. That's it for our March market update. I'm Christine Kopr, VP of Sales with Sotheby's Realty in Vancouver, BC. Make sure you like and subscribe to our YouTube channel, Instagram, and make sure you sign up for our newsletter to stay in touch, and as well as get additional information that we don't always post about on the real estate market. Thank you so much, and see you next month.